Will Palomar, PLMR, beat estimates again in its next earnings report? Looking for a stock that has been consistently beating earnings estimates and might be well positioned to keep the streak alive in its next quarterly report? Palomar, PLMR, which belongs to the Zacks insurance, property and casualty industry, could be a great candidate to consider. This insurance holding company has seen a nice streak of beating earnings estimates, especially when looking at the previous two reports. The average surprise for the last two quarters was 18.23%. For the most recent quarter, Palomar was expected to post earnings of $1.24 per share, but it reported $1.52 per share instead, representing a surprise of 22.58%. For the previous quarter, the consensus estimate was $1.08 per share, while it actually produced $1.23 per share, a surprise of 13.89%. Price and EPS surprise. For Palomar, estimates have been trending higher, thanks in part to this earnings surprise history. And when you look at the stock's positive Zacks earnings ESP, expected surprise prediction, it's a great indicator of a future earnings beat, especially when combined with its solid Zacks rank. With the earnings ESP metric, it's important to note that a negative value reduces its predictive power. However, a negative earnings ESP does not indicate an earnings miss. Many companies end up beating the consensus EPS estimate, though this is not the only reason why their shares gain. Additionally, some stocks may remain stable even if they end up missing the consensus estimate.